Welcome to The Explainer. Today, we're diving straight into an event so absolutely massive, it's pretty much poised to send shockwaves through the entire global financial system. We are talking about the SpaceX initial public offering. But listen, this isn't just your standard market debut. SpaceX is looking to raise an astonishing $75 billion at a roughly $1.75 trillion valuation. Just let that sink in for a second. That scale completely transforms this from a simple corporate milestone into a literal financial earthquake, one that's going to disrupt everything from passive index funds all the way to speculative crypto markets. So here's exactly what we're going to cover today. First, the historic SpaceX IPO. Second, shocking the global markets. Third, the great liquidity drain. Fourth, the tech and crypto collision. And finally, the Bitcoin treasury twist. All right, let's jump right into part one, the historic SpaceX IPO. Now, to really wrap our heads around what a mega cap size actually looks like for global investors, we have to look back at the 2019 flotation of Saudi Aramco. That deal raised a staggering $29 billion. But at a targeted $75 billion, the SpaceX capital raise doesn't just beat that gold standard record, it completely obliterates it. We are literally talking about the largest stock market debut ever recorded. A capital event of this sheer magnitude demands an unprecedented amount of cash from the market, all at exactly the same time. And you know what's really intensifying this demand? It's the speed at which this is all unfolding. After an S-1 filing in April, the SEC review process moved way faster than anyone anticipated. Because of that, SpaceX moved its schedule up by weeks. So now the investor roadshow is targeted to start June 4th, with deal pricing as early as June 11th, and the actual trading debut on June 12th. This incredibly tight window is creating immense urgency. Institutional asset managers are essentially being forced to scramble under high-stakes pressure to free up the billions in capital required just to participate in this June 12th listing. Which brings us to part two, shocking the global markets. You know, the choice of where to list is rarely an accident for a company of this size. SpaceX heavily favored and ultimately picked the Nasdaq exchange. But actually, this wasn't just a casual preference for a tech-heavy board. It was a highly strategic maneuver. By listing on the Nasdaq, SpaceX positions itself for much faster inclusion into the prestigious Nasdaq 100 index. And getting into that benchmark index quickly, well, that's the exact trigger that forces rapid portfolio adjustments all across the globe. So why does that matter so much? To understand it, we need to talk about passive investment reallocations. Think of this as a forced mass migration of money. When millions of everyday investors put their cash into an index fund that tracks the Nasdaq 100, that fund is required by definition to perfectly mirror the companies in that index, right? So if a $1.75 trillion behemoth like SpaceX is suddenly added to the mix, every single passive fund tracking it is automatically forced to buy SpaceX stock to match its massive weight. The absolutely crucial takeaway here is that this isn't active managers deciding they happen to like the company. No, this is an automatic, non-negotiable shifting of billions of dollars. And that leads directly into part three, the great liquidity drain. Let's think about the systemic consequences of that forced buying. MSCI, who run indexes that are widely tracked by institutional investors everywhere, actually ran a scenario analysis back in February, specifically looking at expected megacap IPOs, and their warning was pretty stark. An event like this unleashes billions of dollars in passive flows. But here's the catch. There's only so much capital to go around. So buying into SpaceX means funds have to sell something else to maintain their balance. This triggers massive sector reallocations. The very real risk here is that a debut of this size literally sucks critical liquidity right out of other listed companies. The money has to come from somewhere, right? It's essentially a giant chain reaction. Let's walk through it. First, the catalyst of Nasdaq 100 inclusion leads directly to forced index buying, which creates those billions in passive flows. Second, that mega-cap $1.75 trillion valuation forces institutional asset managers to make major sector-weight adjustments, causing broad reallocations across benchmark indices. And finally, that record $75 billion capital raise forces a massive concentration of capital, leading straight to a severe liquidity drain in outside equities. Okay, moving to part four, the tech and crypto collision. Now, you might be wondering, does this liquidity drain only affect traditional stock markets? Well, over the past two market cycles, we've actually seen a major shift in how assets behave. There's a rising, undeniable correlation between high-growth technology and AI stocks, like the ones on the Nasdaq, and volatile digital assets, like Bitcoin and Ether. These two asset classes increasingly trade as part of the exact same speculative capital ecosystem. They are, for all intents and purposes, competing for the exact same pool of investor dollars. And that brings up a really vital observation from market analysts. They've noted that money redirected into a major IPO allocation could reduce flows into more volatile assets such as crypto. The massive financial gravity of SpaceX's $75 billion raise threatens to pull speculative capital right out of the digital asset space. If institutions and retail investors are funneling all their risk-on capital into this historic listing, it might temporarily starve the crypto markets of the essential liquidity they absolutely need to thrive. Which brings us to our final section, the Bitcoin Treasury twist. 8,285. That is the exact number of Bitcoin currently held in SpaceX's corporate treasury. Stored securely in Coinbase Prime custody, this massive holding is valued at roughly $656 million. So SpaceX isn't just a rocket company anymore. They are a major Bitcoin holder. And why does this specific detail matter so much right now? Well, because of recent regulatory changes. This makes SpaceX the first historic IPO featuring a massive Bitcoin treasury disclosed under the new fair value accounting standards that were introduced in late 2024. These standards basically require companies to report the most up-to-date value of their crypto assets, making the exposure highly transparent. This is a total game changer. It means that when institutional investors and passive index funds are forced to buy into the SpaceX IPO, they are simultaneously gaining direct, regulated exposure to Bitcoin. Wall Street is literally buying into crypto, whether they actively choose to or not, through the vehicle of a traditional equity listing. So we've looked at the unprecedented scale, the forced reallocations, the massive liquidity drain, and that undeniable bridge this builds directly into the crypto world. The big question we have to leave you with today is this. Will this $1.75 trillion Megacap debut permanently reshape the future of global capital markets? Because the events of June 12th won't just be about rockets launching into space. They'll be about capital launching in entirely new directions. You're definitely going to want to keep a close eye on these markets. Thanks for joining me on this explainer, and keep learning.